Hi everyone, my name is Mary Raymond. I'm talking right now about the Euro US dollar pair. So it appears to me that the Euro US dollar pair is still in a downward channel, and this is a pretty compelling channel right here. This particular level corresponds to an important Fibonacci level at 41.75. So I shorted this particular level this morning, and I do favor the downside over the next few days. So you can see that this was a good buying point, and this particular level here also did correspond to an area in the volatility index which was 20. So what we're seeing is on a short-term basis or an intermediate-term basis, the volatility index does act as an accurate technical indicator for the short-term moves in the so-called risk-based currencies. And the volatility index is pulled back a little bit today. And while the focus in the market over the last week was on the European debt problems and the continuing downgrades by the rating agencies of various EU countries' debt, this morning the focus was really on Mr. Bernanke's testimony. And if you read the testimony, it appeared to be, to the market participants, probably more dovish than they had anticipated, because he did raise the possibility of additional accommodative monetary policy should the conditions warrant. But they also they said on the other hand, the economy could continue to evolve in a way that would warrant a move towards less accommodative policy. So to me, all this really means is that they're leaving the door open either way. They're saying that they've finished their QE2 program, and they're probably going to take a step back for a few weeks or a few months. It means that the upcoming economic reports are going to be very important, and that we have to pay very close attention to the employment on a weekly and a monthly basis, because that's really going to dictate the Fed policy, which could dictate the move of the dollar coming up. So I think when the market digests this and they realize that the Fed hasn't really committed one way or another to an additional round of quantitative easing or to rate hikes, I think that the market's going to focus again on the trend in the Euro US dollar pair. So what we really want to look at here also is we're at a support level here, and a support level for the US dollar index, which is now in an upward channel. So you want to watch this very carefully, because if it were to break below this level and say move to the 9,500 level, well, that would probably be a point at which you'd want to get out of long dollar positions. So my assessment of just the Euro US dollar pair, I think that it's a good short at 41.75. If you put in a stop around 42, perhaps 42.25, I think that would be a reasonable risk reward level. And you try to look at as many different technical indicators as possible, at least I always do. And what I'm seeing is that the twin RSIs made a bearish cross here, and they haven't made a bullish cross to the upside. And you can see that the RSI did get oversold here, right when the volatility index spiked up. You can also see that the shorter term exponential moving averages made a bearish cross on a daily chart. They haven't crossed to the upside. And it appears to me on the Ichimoku indicator that these lines are still pointing downward, and we did have a bearish cross here. So all in all, basically, once the market stops focusing so much on the Bernanke testimony for today, I think it's possible that the euro may resume its trend. And what the financial market participants have been focusing on, and will probably continue to focus on, the headlines from the various newspapers and the financial news reporting about the continuing saga in the euro and about the debt problems. So until we see a move downward in the yield spreads of some of these countries, particularly in Spain and Italy, we might need to see a big move down in those yield spreads. I think there's going to be continuing pressure on the euro. And also I think that the market is still anticipating additional interest rate hikes from the EU, from the ECB this year. Well, Mr. Trichet at the meeting also left the door open for that. He didn't use the word strong vigilance, and he didn't commit to additional rate hikes. And like many of these monetary officials, they simply say that they're going to watch the indicators in the economic reports and respond to what develops. So, in my opinion, the trend is still down in the Euro US dollar. The other important thing you want to keep an eye on are the earnings that are coming out and the movement of the S&P 500. So, when we're looking at, and we did see, as I said, we saw this movement up in the volatility index. Well, we haven't really seen reaction to the earnings that's overly enthusiastic or overly pessimistic. And what I look at with the S&P right now, it could be in a downward channel. It's kind of difficult to get a clear indication because we haven't really had a strong reaction either way from the earnings. But right here, it looks to me like there's going to take much more momentum and much more risk appetite in the market to push it up to new highs. And it's probably going to have to clear this resistance level above 1350 before we can resume a true bull market. So that's what we want to keep an eye on for the time being, and continue to monitor the earnings. And once the focus is off Bernanke's testimony, I think that the euro is probably going to continue its downward trend.